Hello. Alright, this is for all my students that I will be teaching stuff. But this is gonna be basically about my PDI model, or not my, but PDI model that is based on I think PB Blake and PB Patrick are going off of their mech model. I basically kind of changed just a slight few things to try to get more successful trades. But yeah, these are for my students because I don't want to keep repeating myself, and if they have questions they can just ask me directly. So yeah, but before we get into the actual strategy, I think everybody should know that trading is basically gambling, but more like strategic gambling. Yeah, this is not money advice. This is your risk of your own money or whatever. But if this skill set is something that you can definitely master and utilize to hopefully make a bunch of money, hopefully. But yeah, trading mentality, don't expect a lot. It's not get rich quick. I learned it the hard way. Lost a bunch of money, but yeah. Also another thing, if you really want this, you gotta just wake up every day, grind your ass off, everything like that. That's just, you just have to do it if you really want to. Plus, if you're really passionate in this whole thing, you would grind your ass off in the first place anyways. If you're not putting in the work, maybe trading is just not for you. Okay, that's just straight up reality. Okay. Just a little thing. This is not scripted. I'm literally freeballing it. It's gonna be all over the place. But if you guys have questions after watching the video, I will answer them for free. All of this is gonna be free. I don't want anybody paying nothing. This is all pure knowledge for you guys. And yeah, I don't plan on doing anything because all my money is basically gonna be made from the strategy. I don't need money for you. I'm not your fucking course worker, okay? Or anything like that. So yeah, grind, obviously. We're gonna put grind every day. Well, not every day, but again, the work you put in equal the results you will get later. Okay. Even though I know my strategy works, and I know that I make money from this, I still practice every day. Although I do take breaks, I always practice by back testing, redefine the strategy to where when I notice patterns in the market and stuff like that. Okay. And also if there's any updates on the strategies or anything, I'll let you guys know. Let the students know. But yeah, I'll grind every day. Not a get rich quick scheme. Because here's the thing. For me, I basically started getting into day trading ever since I think freshman year of high school. I think the summer of freshman year. But there was always a bunch of strategy I looked for, I don't know, support resistance, freaking ICT, I don't know, VWAP. I don't know, I still don't even know what that VWAP is for. But yeah, but all these strategy work, but you just need to understand it completely and stick to it. Because if you don't stick to it and you just jump in strategy, you'll never master anything. You're just getting random knowledge that you can't utilize. So yeah, just stick to a strategy. It doesn't have to be this. Maybe you don't like this strategy. Maybe you would rather do support resistance, I don't know, trend lines or whatever you want. But yeah, just stick to this strategy. And yeah, if you're gonna do this model, I say watch PB Blake, PB trading, or later on I'll probably make more stuff for you guys. But yeah, grind every day. It's not get rich quick scheme. You gotta put many years into this, many hours. Stick to one strategy. And yeah, I think if there's any more mentality stuff, psychology stuff, I will go into it later. But yeah, okay. Now, beware, this model is more advanced. Although it's very simplistic, it's more advanced compared to your other ones. So if you don't know what a candlestick is, or you don't even know what a swing low, swing high, this video is not for you. Go watch those basic stuff first. Okay. So yeah, basically, yeah, okay. Now to the actual strategy or model. The model is PDI. Okay, PDI model. It's pre-distribution inversion. Okay. Yeah, pre-distribution inversion. This is very similar to the AMD model, which is accumulation, manipulation, distribution. Which I should probably show here. Hold on, I gotta find this somewhere. Pull trading view instead. Don't mind any of this. This is my back test. Actually, maybe we want. Actually, no, we don't want to. All right. Let's do this. Let's do it here. PDI, which is pre-distribution inversion. Very similar to AMD, which is accumulation, manipulation, distribution. Okay. So basically, before we get into the PDI model, you guys need to understand accumulation, manipulation, and distribution. Okay. So basically, accumulation is basically when the market is consolidating. So like this bullshit. Oh shit, just fucking lagged. Oh shit. Yeah, it's like consolidating like this. There's not really much of a move, okay? Manipulation is when the market manipulates and takes out one of these, it takes out one of the highs and lows of the accumulation zone. So in this case, it manipulated this low. Distribution is when it distributes, just keeps going higher. Okay, so there's two ways it could go: consolidate, manipulates up, distribute down, consolidates, manipulates down, distributes up. Those are the two cases. Okay. All right. Accumulation is consolidating. Manipulation is when the move, the leg, takes out one of the highs and lows of the accumulation zones, or like this highs and low zones. Yeah. So yeah, and distribution is basically the part where we will talk about in the PDI part. Okay. So basically, so for PDI, pre-distribution inversion, the good thing about this strategy is that it allows you to enter the trade before the distribution part leg happens, so you can utilize that. But the main significant difference between these two models is that The PDI model is an entry on a inversion fair value gap. Okay. So, for example, consolidate, manipulation, distribution. Okay. This is a bearish PDI model. This is a bullish PDI model. Okay. The reason why this is the bearish PDI model, why this is bullish PDI model, is because this distribution leg is going down, so bearish market, and this is a bullish market, so this is a bullish PDI model. Okay, so yeah. Again, I just want you to know I'm just freeballing this. Again, I need to kind of think about what to say next. Okay, one big thing we need to understand is that there could be fake manipulation legs, okay? Actually, no, I'll go over that later. But normally the manipulation leg will consist of fair value gaps. So, yeah, fair value gaps. Oh shit. Yeah, fair value gaps, right? For those that don't know what a fair value gap is, it's basically a zone where there's unfilled orders. Like, for example, stop loss, take profits, limit orders, or anything like that. Okay, these are unfilled. Okay, yeah, that's your fair value gap. There's bearish and bullish fair value gaps. For example, a fair value gap would be here. This right here is a bullish one, bullish fair value gap, because this is a zone that yeah, that's unfilled. I mean, until later, see, it fills over here. These are, you can find these everywhere. Here's another one. This is a bearish fair value gap. So yeah, normally how you draw a fair value gap is when there's, say we have a candle here, candle here, candle here, right? This is your fair value gap, okay? But this is a perfect case, okay? There will be obviously wicks and stuff like that, like these wicks, and yeah, there's wicks, right? Remember, when you draw fair value gaps, it's based on the wicks, okay? Not the body, it's the wicks, okay? So yeah, this would be one case, okay? So let me give you some examples where there is no fair value gap. Okay, for example, right here, right, we have fair value gap, right? Right here. This is the bullish one, fair value gap, right? But in a case where this is not, where there's no fair value gap, is, for example, right here. Even though we have this crazy move, we have this wick and this wick right here, so there's no fair value gap made. These were all orders filled, okay? Remember, fair value gaps are based on the wicks, okay? I say, for people that still don't understand fair value gaps, you could definitely search that up on your own, but try practicing finding those. But yeah, fair value gaps. So yeah, back to this. So pre-distribution, inversion, accumulation, manipulation, distribution. Our main thing for the manipulation, we want to have fair value gaps, okay? If there's no fair value gaps, the PDI model is still not there, okay? Because our entry is always based on not entry, the PDI model is always based on the manipulation, okay? If this manipulation is so bad, there is normally meaning there's no fair value gaps, zero, nil. That means no PDI model happened, okay? But there are, normally, on these manipulation legs, there will be a fair value gap. But before I continue, let's find an example of the AMD model. Okay, here is your consolidation zone. Okay, you're in your consolidated, you're not really doing much in this zone. Okay, but then we have manipulation leg, okay, which is right here. Okay, so accumulation, then we have your manipulation right here, and this is your distribution right there. Okay, because as you can see, this is accumulating, and then this manipulation leg takes out this range of the accumulation zone, so the manipulation goes down. How do you know this manipulation is good? Because obviously it takes it out, but also it creates fair value gaps. See, we have one right here, we have another one right here. Yeah, those are right there. Let's find another example. Let's see. Okay, here we have our we basically have our accumulation. All of this is the accumulation technically, but yeah, but normal. When I was trading on this day, this is the accumulation place area. This is your manipulation, and this is your distribution right here, like this. Okay, reason why we have our consolidating zone right here, and it manipulates up. How do you know? Because there's a fair value gap created here. Fair value gap is right there. Okay, let's find one more example. Hopefully a bullish PDI model. This is all trash. Okay, there's this one you could do. This is a zone of accumulation, okay? Then manipulates down, right? And then distribution up. Okay. See accumulation. All of this is accumulation. Manipulates down. How do you know? We have fair value gaps created, and it takes out this range, right? One's right there. Another one's right here. Okay, we have two. Well, we have three also technically, but this one's really doesn't really matter. But yeah, that's your manipulation. It distributes up. Okay. Very nice. Okay, let's go back to today, or back to here. Okay, so yeah, okay. Now we know how to find AMD. You guys should practice that. Okay. Practice finding where or identifying where AMD happens. Okay. So manipulation always happens after accumulation. How do you know it's a good manipulation? Fair value gaps. Okay. Now, to continue, we have consolidation, manipulation, distribution. Okay. Let's say this is this is literally the most ideal situation. We have fair value gap, one fair value gap created, okay? All right, which would be in this right here, okay? The most ideal situation would be one fair value gap and then perfectly inverses, okay? But obviously the market is never that perfect. Manipulation that can create multiple fair value gaps, okay? All right, which could be a problem for us. So normally we'll be looking for the PDI model in the 1 minute time frame, okay? But in cases that we have too many fair value gaps, we have two ways to do this, okay? One way is we can scale up time frames until we find when it becomes only one fair value gap, and hope that that gets inversed. Or we can wait in the 1 minute and for each one, or like each fair value gap to get inverse. Like for example, here, this is the first case again. If we are creating multiple fair value gaps in here, right? If we scaled up to like, this is the 1 minute, by the way. Oh, shit. This is the 1 minute, okay? Let's say this is the 3 minutes, right? This will become one fair value gap, okay? All right, and yeah, you just gotta scale one by one until you find like a fair value, like one fair value gap to make a decent entry, okay? The second one is that we have, actually we should probably just consolidation, manipulation, okay? So we have multiple fair value gaps, okay? We could, in this case, we could wait for this to get inverse, bounce off of this, inverse this, bounce off of this, and then continue down, okay? You can normally, for the most optimal entries, okay, you'll want to get the discounted price, okay? Discounted price meaning the like lowest price or highest price depending on the length of it. It's like the distance from your stop loss, okay? So here's our multiple entries you could do. You could enter off of the bounce of this one, or right away on the inverse if you're really that confident, or wait for the second fair value gap to get inversed to get that confirmation, and then enter off there, or you can go off the bounce right there, okay? Now, normally that I don't really use that one because it's still risky, but yeah, that's like that stuff. Okay, yeah. Yeah. So first, now the steps. Okay. Step 1. For the find accumulation zone. Step 2, find manipulation. How do you know it's a good manipulation? Oh shit. God damn, I don't know who's texting me right now. Sorry, it's one of my students. Is it a good manipulation? It's, oh shoot, I just blanked out. Okay. Is it a good manipulation? It's only when fair value gaps are created, solely FVGs, okay? If there's none, that's not a manipulation, okay? That could be still accumulation. Just remember that it's possible that you might identify certain parts incorrectly and ends up that you get manipulated out of the trade and you miss out on the distribution. So you got fair value gap created right there. So yeah, that's how you know. Second one is, or step 3 is wait, or step 3, yeah, wait for the FVGs to get inversed. Multiple FVGs. Multiple FVGs, then 1, you can scale time frames until you create one FVG but it's also kind of bad. In cases where the FEG is in like 15-minute time frame. That's like normally where it sucks the most. Second case is just wait for each FEG to get inverse for confirmation that the distribution will actually happen. Okay, yeah. So wait for those to get inverse. Your entry will be definitely the best is at a clean inverse or the bounce of the inverse. Okay. Most of the time I would enter off of the clean inverse, okay, but the times where I'll wait for the bounce is when the inversion is too aggressive. Okay. Sometimes your inversions will be very, very, very aggressive. Like you will get negative risk to reward at most times. When is it negative risk to reward? Is when it's less than 1-to-1. Okay. So times to wait for the bounce inversion is too aggressive. Okay. Okay, so there'll be times when the entry is good, sometimes the entry is bad. First time is, or like when to not enter at all is 1, the move is too aggressive, right? 2, you have a negative RR, so less than 1-to-1 RR. 3, you're in a, let's say you're in a bullish PDI or a bearish PDI, but you're in a opposing PD array. Okay, PD array is like fair value gaps, order blocks, breaker blocks, equilibrium, and stuff like that. Okay, if you're, let's say you're in the 1 minute, right? There is a bearish PDI model coming up, but it happens inside a higher time frame bullish fair value gap. That's the time when you do not want to enter. Okay. Also, another time is when you're against equal highs or equal lows, okay? Because equal highs, equal lows are really significant liquidity levels, and they really change. They're like magnets, basically. You could utilize them, but there'll be times when they don't. The price does not want to take over or like take those levels, okay? So you really want to be careful on those. And yeah, I think that's pretty much it for when to not enter, okay? Let's see. What else is there? I think I have in my notes here. I forgot. What else is there? Oh, okay. To help you identify the accumulation, you would want to wait at the end or closing. Normally accumulation happens at the end closing of an hourly candle or 4-hour candle, okay? Because when that closes, all the volume will start kicking in, okay? So around like 10 o'clock open, like when the 10 o'clock area, it's usually when it starts accumulating. So let me give you an example. Yeah, see. Or actually, yeah, here's your accumulation right here, right? And then as soon as that 1 hour candles form, you get that manipulation up, and then you freaking drop, okay? This is your other candle, your new candle, okay? So by the way, when the fair value gap is inversed, it's called an inverse fair value gap. I think that's very obvious. So it's IFVG. Okay, so for taking profit wise, okay, there are two cases. Okay, first, before you think about those cases, you want to look at your bias, your daily bias. So a good way to find your daily bias would be in the 4 hour and the 1 hour. Okay, you want to see before market opens where is market price like disrespecting or respecting, like PDRAs, for example. Here, right, we have, I mean, obviously there's a bearish market, but how do you confirm that? We can see that we inverse this higher time frame fair value gap. We're disrespecting this fair value gap. We're disrespecting this opening. Okay, like this, how you know it's a confirmation of your bias. Okay. You can also go to the 1 hour here too. If you see that we disrespected all of these bullish fair value gaps with this one candle going down, so that's how you know we are at a pretty strong bearish bias. Okay, let's say we have another day. Where's like 9 o'clock? Here's 9 o'clock. Okay, this would be obviously, okay, this is before market open, so this would be an interesting one because we did disrespect all of these liquidity levels, so this was bearish, but we also created another fair value gap here, so we have to be careful. It's like a bias, not a very strong bias. It's like a bias, but it can change, okay, depending on what happens and how it reacts in this period rate. Okay, let's see another one, another 10 o'clock one. 10 o'clock, 10 o'clock, 10 o'clock. Here, 10 o'clock, right? Or no, where's 9? 9:30 is market open Eastern time, by the way. So we are, wow, this can be interesting. I don't really like this. It's very choppy, so it's kind of hard to figure out what your bias is. But I guess you could say right now you're bullish because of the respecting of this. Or no, you didn't respect it, but you right away inversed it. So, okay. Yeah, I don't know what's going on. Too many questions right now. So yeah, how to find bias? Look at your 4 hour, 1 hour time frame, and see where price is respecting, disrespecting PDRAs. Okay, and again, what's a PDRA? Fair value gaps, order blocks, breaker blocks, equilibrium. Yeah, those stuff. You can figure out that stuff online, but maybe I'll make a video later about it. Okay, so yeah, find your bias. Okay. Okay, let's say you're confirmed on a bias, a bullish bias or bearish bias. How do you know when to take profit, right? Normally, if your bullish bias, like let's say your bias and the PDI model aligns, like you have a bullish bias and the PDI model is a bullish PDI, okay? You would take partials, okay? But let's say they're opposing. Let's say you have a bearish bias, but a bullish PDI model shows up. Then you'll take a one, either you take full on the most recent swing, high or low, depending, okay? So for example, where's the thing? Okay, here, consolidating PDI model right here. Okay, this is a bullish PDI model, right? And let's say we have here, right? That's your fair value gap right there. And okay, let's say this day you thought it was bullish, okay? Bullish bias plus bullish PDI, very strong. All right, so this is what you do. Put your stop loss obviously at the most recent low, swing low. You take a partial at the most recent high, so here, right? And then the rest you'll keep riding up, okay, to external liquidity. What are external liquidity? Probably unfilled highs or lows, equal highs and lows, unfilled fair value gaps start outside. Yeah, that stuff. Okay, but normally when you hit this swing high, you will go break even on your stop loss, so you're not in risk of losing any money. Okay. Now, a time where you would be not taking partials is when, let's say, since there's a bullish bias or bullish PDI, you have a bearish bias, right? You will take full profit at the most recent high. Okay, got it? Most recent high. Normally, these would be a 1-to-1 ratio for risk to reward. Okay, normally these, I think the max you'll probably go is like 1.5 risk to reward. That's normally what happens. But the reason why these trades are good is because although you're making not as much money, you're in less risk of losing money. Okay. And plus, this is good because as you do it more, right? Because the setup happens very often, you'll finally be able to identify these when these happen very quickly. Okay. So now you know where to take profit and stuff like that. Oh, again, refresh when to not take entry when your freaking fair value gap is so fucking high, right? Right here, and your stop loss is here, and your take profit is here. That's a 0.22 partial, okay, or risk to reward. Okay, that's negative R right there. Why would you want to take this? Okay, you're basically losing money. Okay, I don't understand why you would take that. I think you would be stupid if you take that. What else is there? Yeah, I think, oh right, okay, so I know these are the steps for the strategy, but there's some things you want to check before you start into the day. Okay, first you got to check news. Okay, all right, places you can check news is here, I'll give you an example. Oh damn, I'm black now. Forex Factory is really good. Okay, you can go to create account, or I don't know if you want to create account, but normally, okay, this is usually what you'll see. Okay, all of this bullshit. Okay, this is my setup. I normally go, well, actually you leave this one because there'll be times where there'll be bank holidays and you don't want to trade on bank holidays. Okay, you don't really need to care about this one, but make sure or you have USD only. Just USD is fine. Apply the filter and you'll get this. Okay, so these red folders are important news. Okay, that you need. News equals volume and liquidity. Okay, so we want news, but there's certain news you want to avoid. Okay, for example, news is to avoid be FOMC conference, Fed Powell speaks. I don't know, when Trump speaks, because he's doing crazy stuff now. Trump speaks, PPI, CPI, PPI, CPI, FOMC, Fed Powell speaks. I think that's it. Let me double check because these are the main ones. CPI, PP, yeah, these would be days you don't want to trade, and also technically the day before you don't want to trade also, but it's like sometimes the setup is actually there. Oh wait, how do I? Okay, yeah, see, FOMC, press conference, statements, these are you don't want to deal with. Yeah, these are okay to be trading. CPI, PPI, FOMC, you don't want to be part of. Yes, this, since this is before market open, I think this would be okay time to trade. But yeah, that's basically for that. Those are news you'd want to check. Always. Oh, and then after you figure out the news and figure out which days you actually want to trade, you can then find your bias. I already told you guys how to find your bias. And then once you do the bias, you find your model right here. Okay, normally a rule of thumb is to trade only once per day. Okay, unless the second setup shows up and it looks freaking obvious, like textbook. Okay, then you can take those. Okay, but don't overtrade. Don't have FOMO. Don't get greedy or anything. You basically gotta be emotionless, but it's very hard to do that because I'm an emotional person. Okay, but I learned that this is all just candles on my screen, and I just think that's just your thing right there, not really anything. So you build on to that, like basically emotionless trading, which is the best way to go. Okay, so yeah, review, check news first, find your bias. Let's say you want to trade that day, find your PDI model. How do you find your PDI model? First, you find your accumulation zone. When does accumulation zone normally happen? It happens anytime, but normally around the closing of an hourly or 4-hour candle. Okay, then you have a manipulation, right? Manipulation happens, or a valid manipulation is always when fair value gaps are created and it takes out the range of the consolidation, either highs and lows, and then fair value gaps are made. Okay, fair value, where do you enter off? Inverse fair value gaps. But there will be cases where fair value gaps are, there's multiple fair value gaps. You can see it's right here. You just scale up until you get one fair value gap. Wait for that to get inverse, enter there. Okay, that's your entry. And I think, yeah, I think now that you have a slight grasp of this strategy, you definitely need a paper trade or demo trade. I use FX Replay, the free version. I just rinse and repeat. Freaking, like, don't mind the name, bro. But I just rinse and repeat these sessions. It might be like, I think they stop you at a certain amount of trades, so you just make another account and just go off of that. Just keep practicing. And oh, your win rate, you're considered very successful if you have like a 60% win rate. Like, that's still really good. Okay, don't aim for like an 80% stuff. That's like if everything's perfect. Okay, that's just bullshit. Okay, if you try to get a super high win rates. Okay, but yeah, if you guys don't have the capital, also there's prop firms. Okay, these prop firms are like Top Step, Apex, My Funded Futures, and stuff like that. Personally, I think I had the best time with Apex and Top Step. Okay, there's some things you might want to know about these two. These are the main two players of the prop firm industry. This is all futures, by the way, futures trading. So like ES and NQ, or MES MNQ. Okay. Top Step on they don't really have much discounts. Apex has a bunch of discounts, like so often. They, like, I think right now there's a freaking 90% off all evals. Like, that's crazy. I say you guys should take advantage of that. Top Step barely has this stuff, so it's kind of sucks. But Top Step, you don't have a trailing drawdown, like an active trailing drawdown, but Apex does. So basically, what that is like at the end of the day for Top Step, at the end of the day, wherever you're at, right, your drawdown will change. Okay, for example, let's go to Top Step. Let me show you. You see here on the 50K account, right? Your maximum loss is 2,000. Okay, this is where your drawdown is at. Let's say you made like 1K, right? Your drawdown will go up to 1K. So that means if you hit a balance of 49K, you will bomb the account basically. This will continue going up until you hit that 50K place. Okay, it will just keep going up. Okay, but Apex on the other hand, fucking god, you see here there's the trailing threshold, right? Every single time your prop, even in a live trade, your freaking drawdown goes up with it. So let's say you're in a trade and you're up, right? Your drawdown goes up, but let's say it goes back, your trade goes down, your drawdown doesn't go back down, it stays there. So you're getting closer to that drawdown and more higher risk of bombing that account. Okay, so I say if you're really a beginner, go to Top Step. Okay, if you're more experienced, go to Apex. Okay, but a really good thing about Apex is that you can get, I think, up to 20 or 25 accounts. So instead of like making 1K in 20, 1K in 20 accounts, you can get 10 accounts and make like $100 on it. I don't know if that's the right math. Yeah, I think that's the right math. Yeah, you just make $100 per account. Like, I think that's freaking broken. So I think that's like so awesome about Apex. You can copy trade that. Top Step, you're limited to, I think, either 3 or 5. I think last time I checked it was 3. You're limited to 3 copy trading accounts. So if you really want to maximize your profits, go for 3 accounts at 150K. Yeah. Apex 20 accounts is like the max, but yeah, if you're, I don't know, broke, like when I was, go with these. If you only have the money to even freaking start one, go get a job. Okay, go get a part-time job, or I don't know, scam people, whatever. However you want to get your, ask your parents too. But yeah, I think that's it. I think there's some more stuff, but that's for another video. So yeah, okay.